So hi everyone, I'm here with Ben Williams today, and he's the founder of JOYnt. And JOYnt, you're sort of in the payment space. I think is probably the best way of looking into like looking at consumer payments, and your background's been in payments. So thanks very much for kind of joining me today.
Very happy to be here. Thanks for having me.
So that whole space has changed massively, I suppose, over the last 20 odd years. I mean, way back, I started off in sort of in payments anyway, certainly in credit cards and payments, although, in some of the networks. How have you sort of seen that evolve over the last sort of like 20 years or so? It has just dramatically changed.
Yeah, absolutely. I mean, I think there's been a strong push towards digitization or certainly technology-led solutions. And, over 20 years, I suppose you think about direct debit itself has sort of grown hugely. Faster payments has come into the landscape, which is sort of shifting how banks interact with each other and how people send money. And then right through to now, we're kind of talking about open banking that is 2025, although it's been around for sort of 10, 11, 12 years, and numerous other things that are coming into the space as well, really sort of pushing us forward from a technology sort of first perspective.
Yeah, I mean, what's I suppose what are the biggest things that people are like looking for day today?
So I think, I mean, the first thing to say about direct debit is that, if it works, I think you should keep using it because fundamentally it does a great job and a great service. I think there is the growing move towards digitization of everything. The need for control and visibility maybe is where direct debit kind of could catch up. And that's, fundamentally what we're seeing with variable recurring payments that are coming in, and the commercial variable recurring payments in particular. It's sort of offering that flexibility or a higher level of flexibility, maybe not as much as perhaps is needed in some instances. And so I think, that the key drivers have very much been, so somebody once said this to me, but I use it all the time. People today watch their Deliveroo drive down the street on their phone. That is the level of insight that people are expecting today. And certainly direct debit is potentially kind of behind a wall or a veil of sort of stuff that happens. Whereas today we're sort of moving into that level of need to see what's going on and understand that, sort of not so much the workings, but actually where as an individual what I need to get done is.
Do you think that the trust landscape has kind of changed from, because direct debit's very much sort of you're sort of trusting of your financial institution, and then there's sort of rules set up to make sure that that's sort of enshrined, I suppose. Whereas I suppose in this new kind of environment, there's almost like a feeling like I want to be in control, and it's I'm in control rather than me devolving control to someone else. Do you think is that a kind of it feels like that's a societal change that's sort of evolved?
So certainly the kind of research we've done is it's less about the trust and more about how people's lives have changed. So I think, there is some studies I've seen is that particularly utilities, for example, come out very highly on a trust scale. I think that the challenge is that consumers these days sort of have multiple sources of income. So that's the shift that we're seeing. So whereas, historically, the majority of people would have been salaried, their money would have gone into their account on the 31st of the month, the direct debits would have come out on the 1st of the month. What we're seeing now is that actually people have that salary, but they also sell some stuff on Vinted, they work down the pub for a couple of shifts because they need to kind of have the extra income. And at that point, potentially the bills and the invoices they need to pay don't necessarily align exactly to their income, which is kind of how direct debit was built and what it was built for. So that flexibility to align to income perhaps isn't there as much as it needs to be.
And so that's a really consequence of our lives becoming busier. Maybe it becomes a little bit more choppy in terms of like, more things happening at the same time, and we're multitasking more essentially.
Yeah, and I mean, the pressures of the cost of living as well. People are needing to have those additional income streams from, to coin the phrase, the sort of the gig economy, and fundamentally it's sort of more flexible for their lives, right? As well, it is, you can switch on or switch off. So maybe you want to do, that you have a kind of a big bill coming. You might maybe need to go and do some extra income work, whatever that looks like, maybe, or selling some things on Vinted this particular week because you know what's coming next week, or you maybe need to have some additional income from somewhere. but you have the flexibility to say, yeah, I'm available for more shifts or fewer shifts, because there's either money that needs to be spent or there's other things going on in life, as you say, and that flexibility is the kind of key piece there.
And from a technological point of view, I mean, we talked a bit about open banking kind of coming through. That's sort of like a first layer of it. How does technology allow us to sort of reflect some of that? Because it feels like it's hand in hand to a certain extent, which is we've got the capability to be able to do it, so we do it. Therefore, we need more capability to be able to do it as well, in terms of like fine tuning our lives all the time. And it becomes a bit of a game to a certain extent. Is like, how can I get the most out of it? I mean, what's the role that kind of technology kind of plays? Because I mean, again, back to direct debit, I suppose it was a process that was very much driven of the time. It seems quite old fashioned now, particularly with, returns and those kind of things, and the delays around things, but it kind of worked.
Yeah, and again, it still does for a number of people. Let's not get away from the fact that direct debit volumes are growing. The last year's seen over 5 billion direct debits being paid, but there is a kind of a new way of thinking about things in terms of that control and that flexibility that maybe direct debit can't handle right now. But that isn't for everyone. And I think, one of the things that we've seen in the payment space is that the choice that people have now is expanding so significantly. And that's, I think, really is what technology allows. It's kind of, you can adapt the technology to fit in better to the life that people lead. And so they can maximize and remove the stress or the thought process behind, am I going to pay my bills? When am I going to pay my bills? Any of those sorts of things, or I have an invoice due, or whatever it might be, to very much say, actually, I have a better visibility of what's happening. I know when my income's coming in. The bank knows. Any app that I'm using may know through open banking account services, and that will enable me to have a sort of more aligned journey and a more streamlined journey than thinking about, is the money going to be in the account at the right time for direct debit? But as I say, there's a number of people that still direct debit works very well for. So, you kind of don't move away from that necessarily.
And where does open banking kind of fit in with this ecosystem? I know we've sort of had open banking payments have been quite popular in terms of like sort of like being that sort of like pull or push payments, I suppose. That's kind of how you can link it to your bank account. The variable recurring payments, kind of, I mean, there's a lot of excitement around them. I don't think they've really come in yet, have they? I think they're still sort of, there's been a lot of discussion around it. It feels like that's kind of stalled really, and sort of like it's a bit of a gap in the market still.
Well, so Visa made their first one, I think this week or last week. I saw the news with Utilita, I think it was, using their open banking platform. And so I think they're coming. I think they will. The adoption with any of these things is sort of driven by consumers ultimately. It's where consumers are seeing that they need something different. They will potentially test a number of different solutions and find the one that works. So I think there's huge potential for VRPs and commercial VRPs in particular. Are they the answer to everything? I don't think so. I think, as I said before, the choice is key for people. There's a whole range of reasons why different people use different tools. And fundamentally, that's kind of what we have to get back to, right? Is these are tools for people to use and for people to collect what's due them. And really having that choice is potentially one of the key elements.
Yeah, and I know that. So, I mean, the whole open banking journey, talking about account information services as well as payment information servicing, is sort of like, it just feels like it's got a lot of promise, but the rollout seems to be like more frustratingly slower than maybe we wanted, I suppose. Which is, I think, kind of peels really back to sort of like, what's the need? Do people have the trust? And it takes a while versus our expectations around how quickly that sort of like can sort of like ramp up really. I mean, I think adoption certainly on account information services seems like it's been relatively strong recently, but it takes a while to kind of get going, it feels like. I mean, what do you think that the driver of that is? And I suppose I know that you've been in the market looking at new ways of doing things, which sounds like it's much more sort of consumer driven rather than product driven. I mean, is that the key behind it, do you think?
So I think so. I mean, I think one of the best examples I've sort of ever heard as a working use case is with contactless. I mean, contactless was launched in 2008. It really took the limit of how much you could spend on a contactless transaction moving from £10 to £20. If you think about, you're in the pub or wherever you are, and these days particularly, but even back then, £10 probably wouldn't have got you 2 pints, let alone the third pint if you're with a group of
Mm.
people. But also the reach of it, and actually the switch on Oyster is really what was kind of a key tipping point in terms of that availability. Everyone started using it on a daily basis. Everybody understood that actually, it became a kind of a regular feature in people's behaviour, and I think that's really where contactless has gone, sort of done well off the back of those two kind of trigger points, if you like. And I think potentially, open banking is still looking for those trigger points to a certain extent. I think it's growing as we understand as an industry sort of more of the benefits in terms of what consumers are looking for and how to explain to consumers what it is that happens. But ultimately there's always going to be a challenge, and with kind of changing consumer behavior away from their existing methods today. So there potentially is the need for some incentives and other things that I think the industry is kind of trying to work through at the moment.
How do we build into our processes, though, thinking around, it's almost like making sure it's consumer led. I mean, that's what I'm taking away from this conversation, is like make sure whatever we build is kind of like consumer led. And often we sort of sit in, I'm sure we sat in almost the same meetings, if not, we're talking about these great products, great ideas. I mean, it looks great on the whiteboard, there's a great strategy behind it, but it's almost like coming back down to like, what does the consumer actually need? Because that's the piece that's actually going to drive engagement. How do we best think about that to really get things to sort of take off? Because what you're saying is it seems like that's been a bit of a hindrance for us, but we're looking for those use cases, which is the customer relevant, then allows it to kind of take off. Any thoughts on, how do we go about designing products that can help us do that?
Well, I think, consumer experience is key for the mass adoption. Fundamentally, people who work in businesses are also consumers. So if they start using these products because they see the benefit, then they start thinking about how they can apply it to their specific realm and their business that they're working in. I think from a consumer perspective, it's what can open banking do that other things don't do today? And if you compare it to direct debit, as we've said, there's kind of more flexibility, there's potentially more control. If you compare it to card payments, it's potentially a repeatable process for consumers that is arguably simplified. But there are certainly, there's definitely scenarios where cards will be the right answer, direct debit will be the right answer in a different scenario, and then open banking has to sort of find and formulate its right answer, if you like.
And I suppose just linking it back to some of the stuff that you guys are working on developing, I suppose, which is really around, I suppose, linking it through to bills and building that whole sort of payment cycle. How does that sort of like all link together into some of the payment piece?
Sure. So where we're going and what we've seen, I worked at MasterCard and Vocalink previously. I've worked sort of on Pay.UK initiatives, and fundamentally what we're sort of seeing, or what we saw, was direct debit is good, and certainly when I was doing the research, it is good for sort of 85% of payments, if you like. But there's this other gap, and fundamentally that user experience currently isn't strong when you look at how other interactions they may have kind of happen elsewhere. So in a shop, it's very seamless. You kind of put your card now on a machine and it's done. Whereas with your bill payments as a household, you have on average 8 bills. At the moment, you're going through 8 different websites or apps on your phone. There's a process that you have to go through for each one. Now, there are kind of shortcuts that have been added in, such as card on file or what have you. But fundamentally, those processes are all different. And for some people, that kind of causes a real struggle. So trying to identify a unified process in that space across multiple businesses will fundamentally support that consumer to actually build the confidence that they need to say, yeah, this is something that I know I can do and that I'm comfortable doing, because I'm not doing it once a month and 8 different processes once a month. I'm actually doing it the same thing 8 times a month. And that's where the kind of confidence builds and where the value comes for the consumer.
And I suppose they can sort of like do that fine tuning a little bit and feel like they're more in control and all the things you're kind of talking about a little bit as well.
Yeah, and absolutely. If you think about the bills that come through that are not on direct debit, you often have 7 to 14 days to pay these bills. Now, quite often with the direct debit, you'll have a notification and the money will then be taken out or attempted to be taken out. When you don't have a direct debit, you are responsible for paying it over that 7 days, but there's no reason you can't pay it immediately. There's no reason you can't pay it on the 7th day or any time in between. At the moment, the process is have an email or some kind of notification, remember to do it. You're in the middle of making a cup of tea or whatever you're doing. You pause the email. By the time you've gone back to the email, you've had 100 marketing emails from wherever you've shopped before, and suddenly you've lost it, and it's a bit of a struggle to get through. So actually having a dedicated space that with a repeatable process is really kind of one of the key elements where that user experience can sort of drive a better completion rate and reduce those failed payments.
Where do you think that sort of links to data? I mean, there's been a lot of talk around data, how we look at household expenditure, particularly in the advice space as an example as well. Where's the opportunity in terms of obviously gathering all that data in one place, you get a more holistic view, I suppose, around consumer expenditure? Do you think there's opportunity to help people manage the money better as a result of that? I mean, you must get access to some of that data.
Sure. So, I mean, I think there's some of the key pieces that maybe with auto reconciliation, you with the kind of flow through, you have a payment identifier fundamentally that you can attach into an accounting package, which then there is a clear link, a digital journey that goes through and identifies that payment journey, so you can always track it back. And the other piece, I think, realistically, is if somebody is managing their bill payments proactively in advance, you can feed that data back into a business. So actually you could say, yeah, this person has set a reminder for the bill came in on day one, they've set a reminder for day 3 or day 4. That information can be fed back, which in turn sort of helps the business's cash flow to understand actually when that money's coming in. And over time, I think with enough data, where you get to is you can start to see particular sort of individuals' behaviour. So it may be that somebody always pays their bill within 20 minutes. It might be somebody else leaves it until the very last minute to pay. It might be something in between. But you start to build up a picture, and actually, having spoken to some kind of credit reference agencies as well, actually that level of insight maybe isn't there today, which could be incredibly valuable in terms of assessing somebody's ability to pay and where they are on the affordability journey as well.
Yeah, and when you sort of like looked at consumers or done research around it, I mean, what are the main types that kind of customers fall into? I mean, most people sort of like pay pretty much on time, or is there that sort of real need to sort of fine tune it, or people paying as soon as it comes in? I mean, is it an even distribution, or do you get sort of different sort of certain types of people, I suppose?
Yeah, I mean, so
you and I probably pay on time, I would think, just given our backgrounds. But
yeah, certainly try to. I mean, although actually, the more I go on, the more I'm kind of like, what's the last possible time that I could pay potentially? Can I have the money in my account until the date that I can pay it? But I think there's really what it comes down to is the aligning that payment to when income has come into the account. So it's not necessarily, if you have money in your account, yep, some people are very much like, I just want to get rid of it as a thought process. I don't want to think about that bill anymore, so I'm just going to pay it immediately. Other people are very much like, actually, potentially I need to keep that money in my account in case something happens, and I don't know what that something might be, but there might be something that could happen, and so actually I'm going to hold it until the last minute, but I don't want to miss that payment. So I need to kind of be super organized about that. And actually there aren't really the tools there to say, yeah, you can be, there is something that helps you be organized at the moment. It's quite a laborious process to be that organized. So I think what we're looking at is kind of catering for a number of people, and the way they manage those bills when they're not using direct debit is kind of really important. And there will be different answers for different people, certainly.
Yeah, I mean, it's just a bit like just-in-time payments, isn't it? Like just-in-time in manufacturing, which things arrive just in time, but it would be more, and that's more efficient because you're not holding on to stock, those kind of things. And I suppose that's the same kind of thinking around payments, which is around just-in-time payments, right? So it's like you're holding on to the money until it's actually due, but then you've got to have certainty it doesn't tip over because of fees and late payment fees and those kind of things as well. So, how big of a segment in the market do you think people are in terms of like managing things more finely? I mean, for some people it probably becomes almost like a bit like a hobby. I would think. I mean, I can see myself sort of like on the sofa, almost like managing it very finely, trying to do it. I mean, how big do you think that is?
Well, so certainly in the consumer space, there's sort of around 6 to 6.5, say, regular household payments annually, and if direct debit's covering off just over 5 billion. Well, it sort of leaves about 1.2, 1.3 billion payments that are there. So it's a sizable market in terms of different people, but it's not one person never uses direct debit, one person only uses direct debit. It's very much a case of, well, actually one person has one direct debit because, I don't know, maybe for their electricity they get a discount, and then all the other bills they don't use direct debit for because they want that level of control. Or it might be that somebody says, oh, actually that's a new bill, I'm not sure I want to give them responsibility for pulling money out of my account, so I'm not going to have a direct debit for that one bill, but the other 6 or 7 that I have, I'm very happy for direct debits to go out because I will pay them and I know I'll have the money. And it's kind of a mix. So it's, you can't really see it as one consumer does one thing. It's very much the payments landscape as a whole is kind of spread, and different people will have different mixes within that.
And do you think there's opportunity to extend that to looking at unsecured credit, for example, credit cards or those kind of things as well? I mean, that's all within the payments landscape, is it?
So I think the data feeds into other or into that space. Fundamentally, it's at the moment the way it sort of works is, the bill is paid on time or it's not, right? Fundamentally, there's no sort of deeper level of insight into whether there was a conscious decision to pay that bill, or whether it's just there was money in the account at the right time or there wasn't. That's kind of the data we see. Obviously, the more data that we have access to as an industry, the better those kind of decisioning tools can come. But certainly around, seeing how somebody behaves towards their bills potentially is one indicator amongst a number of others around their ability to pay the invoices that are due, fundamentally. And also there's a huge amount of work that has been done and continues to be done around kind of early warning signs, if you like, or people that are at risk of maybe moving into debt. So that's where there's a huge opportunity there to really support people and kind of guide them through the process of not falling into debt potentially. And also you can kind of understand where maybe it's one-offs, or is it an indicator, is it a one-off challenge that people are having, or what's going on. And as with most things in life, the more data you have, the better decisions can be made, fundamentally.
I mean, there's probably some quite interesting stats there looking around types of payment behavior, and it's not around whether it was paid or not, as you say. It's like how they've actually paid that, almost like the data beneath that, and in terms of like, is that indicative of potential financial difficulties or vulnerability or those kind of things, and using those indicators through that payment process to then really flag that up in terms of like, here are potential solutions for you from an advice point of view.
Yeah, absolutely. And I think, one of those, as an example, and this is probably a very simple, oversimplified version of it, but the person who pays their bills within 20 minutes of receiving the bill suddenly starts drifting a day or 2 or 3 behind. Well, actually, is that a pattern that's being repeated? Is that somebody who is actually needing help but doesn't know how to manage help, or potentially doesn't want to ask for help? But actually, does that data start to show those kind of behavioural patterns that maybe do flag that there is potentially a challenge there?
Yeah, I mean, it feels like we don't necessarily look at that next level of detail down, because it's like up to now it's been too complicated to do, but now we can start to get to some of that. And I suppose the challenge is going to be, how do we start processing it and bubbling it up and then communicating? And it's like it becomes the next level problem almost.
Yeah, and I think this is where that there's a lot of people that have thought about a number of these things already, and it's as you say, it's the drive to make the use of this technology and this tool fundamentally more appealing to consumers, so that we can then drive some of those benefits back to the consumers, but also to businesses. I think I see it very much a kind of a win-win-win across the ecosystem for all of this new technology, and ultimately for technology to take off, that pretty much is what has to be true, right? If you think about when debits came in, it was better for businesses because they could control when the money came in, but for consumers, they didn't have to think about it anymore. They didn't have to go to the post office or their bank or wherever they went to pay the money or send the check or whatever else it might be. That they actually had this automated layer which made their lives simpler from that perspective.
I mean, just taking a sort of a step back, I suppose, in terms of like a wider kind of aspect in terms of the finance landscape and sort of like, in-store finance, it's almost like the finance journey feels like it's getting broken down from being just like major lenders into smaller lenders, those kind of things. Do you see that sort of continuing in terms of almost like, either in-app finance, in-process finance, sort of like expanding out as a result of some of the technology changes you can have? I mean, buy now, pay later was one example, right? Where it's almost like got small amounts of finance, or the finance journeys getting broken out from being large lenders to being sort of elements of it. I mean, do you think that's another trend we'll see coming through, really driven by technology?
Well, so I mean, I think more generally, the key thing that technology does is find those inefficiencies in a system fundamentally, right? And I think I wouldn't like to say that I understand even 95% or 99% of them. I'm sure there are plenty of inefficiencies throughout our system that will be kind of found, and technology will be applied to those areas. So yeah, buy now, pay later certainly is one, but there will be numerous others, and bill payments is one that I think, which is why we're kind of playing in that space, is one that we feel is actually ready for a significant uplift, particularly for those people who are struggling with direct debits.
And I suppose if you were to look out into 26, but also sort of like 5 years out, I mean, where do you sort of like see the sort of like the industry kind of going, given what's changed over the last sort of 10 years? Where do you think we'll end up being, particularly the advent of stuff like, I mean, AI being talked about, but there's other stuff that's out there. I mean, I suppose it's really data to a certain extent. I mean, what's your kind of vision of where you think it will be?
I mean, that's a really tough one. If I knew that, I'm not sure I'd be sat in here if I had the ability to predict
Payments,
5 years
of
ahead.
course, but
Yeah, no,
yeah.
of course. But I mean, well, look, I think there's a sort of stigma, if you like, attached to payments, that it's kind of a laborious process. It's a pain point for people. So anything that removes that pain, or makes the involvement of people in the payment process shorter and less, probably is something that has legs and has traction. What that looks like in the real world, and how comfortable people are with handing over their potentially their payment details to a autonomous or semi-autonomous piece of tech, piece of kit, I wouldn't like to say, but certainly there's a balance between some people very happy never to touch a payment because it's just too much, or that they're just not interested, or right back to people who want that full control, as you say, potentially people who are still having a spreadsheet to manage all of their household bills and all of their outgoings, despite the fact there's technology there that offers budgeting tools and whatever else. I think there's a full spectrum there of how people will manage it. And potentially the pace of change it increases really with the advent of AI, and arguably it's potentially within business is really where you can kind of see the kicker, as some of those processes that are maybe very manual today, or are repeatable but have to be accurate. Maybe there's an oversight view, or an oversight position comes in, rather than an actual kind of doing position.
I mean, there's kind of this interesting concept, I suppose, thinking in economics, which is around velocity of money, isn't there? Right, the faster money moves around the system, almost like the more work it can do. So therefore, it's the bigger the economy comes. So it helps economically. And I mean, so we sort of, I think the payments industry becomes a big part of that in terms of like, think about faster payments as an example, how money moves around quicker, but then also how we more finely manage our money then actually helps with the efficiency of how that money's kind of used as well. So there's like kind of an economic kind of growth sort of like angle to the whole thing as well, which is like, because I think payments industry can really help with that, I think.
Yeah, I mean, I think, yeah, very much. I mean, I think, as you say, it's the faster money moves, the more confidence I suppose people have, or businesses have, to move on to the next thing and reuse that money fundamentally. But not necessarily even from the speed, but from the insight level. If you know that you're going to get a certain amount of money on a particular day, well, how, when you can either pay your bills or put some funds into treasury, or fund the next round of whatever kind of capex or opex you need to do, whatever it might be. It's that sort of insight and visibility as to when the funds are moving is probably just as important. And I think that's why there's that mix fundamentally of the payments landscape, and I don't think it'll ever be one size fits all.
So one of the things obviously that happens particularly in the collections life cycle is things like failed payments and those kind of things. I mean, how does that link into, I suppose, that the payment journey and sort of making sure what are the impacts of that, I suppose, that you kind of see from your perspective, at least anyway?
Well, so certainly some the research that we've done most recently, the key pain point was kind of people remembering the due dates. And if you think about the process around it, potentially the reminder comes in an email format, it gets buried under however many other emails. Somebody who doesn't action that payment immediately has 7 days to pay it. Well, by the time 7 days has gone past, there are probably hundreds of marketing emails that have come through. So actually, what we're focused on is how do we kind of cut through that noise? And one of the ways we think about that is by having reminders in a dedicated portal, effectively, which is our app. Fundamentally, you can really hone in on the important things within that kind of inbox, if you like, or any of that incoming messaging that's happening. And so that will really drive a reduction in failed payments. And the stats that we kind of see in the market are that direct debits are around 1%, under 1% of failures, or potentially going up a little bit, but non-direct debits tend to have a 10% failure rate. So really that's a sort of 10 to 12 times higher failed payments, which really sort of tool, and one of the key things that we're focused on is the benefit to businesses of reducing that failed payments rate, really.
So it's really around sort of like giving you the tool to almost like do that sort of cash flow management to a certain extent. So like you can fine tune your cash flow management in terms of like when payments need to be made versus not, and sort of like smooth that out using a bit of intelligence, essentially.
Yeah, I mean, if you think about your emails, you don't interact with maybe an Uber for a taxi, or a delivery. I sort of used that example before because ultimately very good at what they've done. You don't use your email to focus on when your food's arriving or when your taxi's arriving or where you're going or to book that. Whereas payments currently still seem to go through that channel, and that's kind of, I think, where we see the sort of the real benefit of a consumer focused solution for businesses will be fundamentally.
Yeah. Well, it's been an interesting journey. I know, even since when I first started work. I mean, just think about, how often I even use cash now. But I mean, it's like just changed fundamentally. So this sounds like it's another evolution we got to look forward to as well. So, Ben, thanks very much. Appreciate you making the time. It's fascinating. Yeah, great to chat to you.
Well, thank you very much for having me, Chris, and I hope it was insightful and useful for your audience.
Okay.